All right, we are back with another end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. Let's jump right into it. All right, so if you take a look here at the gold market, you will notice that we came into today with a rally alert, and look what we got: upside production. Now it's funny because it was looking like the market was going to top out, but now the perspective has flip flopped. So we had this crash alert here. Then we've picked up some buying from 2 days ago, and then we had this rally alert that pops up, and we have the neutrality bar. So looks like the downside has been negated for now, and the market wants to build a bullish case to rally from. And it should be noted that there is a resistance zone around the 1850 mark. You can't see it on the algo chart here, but it's there. And I think that's probably why this started to crop up as well, the neutrality bar, as the markets are pretty much tame at this point. Um, Still moving sideways overall, if you really want to go there. That's basically what you're seeing here: sideways to slightly higher prices in gold. So the perspective has changed now from crash alert to rally alert in gold. Also, silver has flip flopped now. Silver had a powerful rally. All right. And as you can see, we had the crash alert here. We got the initial downside production giving another crash alert. Then the market flip flopped and gave us a rally alert. And then the market rallies today. Very interesting turn of events. But even in this scenario here, the market has now the neutrality bar. So we're probably going to see sideways trading here for the next couple of trading sessions. And the market seems to be supported now around a $23 per ounce right now. All right, moving along, taking a look now at the Dow Jones by way of ticker DIA. And you can see here that we do not have a rally alert. All right, there is no rally alert. Yeah, the market had finished in the green slightly, but as you can see here, this is consolidation down here at a bear market support, not far away from the top of the Kumo cloud at 325. So the market is still under sales pressure, believe it or not. Market is still bearish. The complexion of the market has flipped to a green perspective, went from bearish to bullish, but the market is not rallying yet. Will it use this bounce off of the top of the Kumo cloud to try to get that going? Hard to say right now, but this is a critical juncture, believe it or not, at this Kumo cloud level. Because if these supports here, if the top of the cloud and bottom of the cloud does not hold, you go into free fall and take out the 52-week lows. Next up is the Russell. The ticker is IWM. Now you can see here it's weaker than the Dow because it's already under the Kumo cloud and it's into free fall status as we speak. And yes, the 52-week low is now in play for the Russell. The bear market has reclaimed the Russell. Look out below. Next is oil by way of ticker OIH. And we've had back-to-back rally alerts, but the $300 share price is proving to be a psychological resistance point, but the market still has a bullish bias to it. So we'll see if price action can truly get out of the Kumo cloud. Next up is the NASDAQ 100 by way of the QQQ. All right, so as you can see here, this market is also below the Kumo cloud, and it's in a free fall status. And the 52-week low for the NASDAQ 100 is also in play, just like with the Russell. Yeah, folks, Indicators have not turned bullish on the US stock indices as of right now. It is not. It has not. See, if you look at what happened on this day here on December the 13th, when we had that big rally on the CPI data, all this was a mechanical run it was a stop run to knock out weak shorts. This is all it did. It fooled some weak longs as well to get long to add fuel to the rally, and then it collapsed into the close. And then, as you know, anyone who was bullish has long been stopped out now. Anyone who was bearish and was able to hang on was able to ride that and then add to the shorts to where we are now. So it is still looking quite bearish for the NASDAQ and the Russell, believe it or not. Well, what about the S&P 500 by way of ticker SPY? Well, this one is hanging on. It hasn't fallen out of the Kumo cloud as yet, but it is threatening to do so as we hit a new weekly low today. If this thing falls out of the cloud, then the 52-week lows back here will also be in play. And we're looking at a precipitous drop that is pending in the U.S. stock indices. The Dow, I'll go back to that one, is the only thing that's staying afloat here. It's not moving. It's bucking its brothers and sisters. It's bucking the NASDAQ, the S&P, and the Russell. It's not moving with them. It's still above the Kumo cloud, and it's changed its complexion from bearish to bullish. I think this is a false narrative, and I think this market's going to fall down and then turn back bearish. I think that's what the other markets are waiting for. It's waiting for the Dow to play ball. That's what the market's waiting for. That's what I believe. All right, let's take a look at bonds. The long bond by way of ticker TLT. And you can see the market is just dropping, hitting new weekly lows in the process, threatening now to challenge this top of the Kumo cloud. We'll call that support around $100. That's par. It's going to be right around par. If that doesn't hold, then the next support is the bottom of the cloud at 95. And then below 95, we go into free fall. So you still got some ways to go. But as you can see, it is looking quite nasty in your bonds at this point. All right, take a look here at, let's see. Let's take a look at the US dollar real quick. All right, so you'll notice that this market is still in free fall as well, trying to move sideways, but still grinding at this point. So you're in, you're several days into the new leg down that we got, but I think this market is getting ready to break the 103 support and continue the free fall. And you have gone from a bullish perspective to a bear market perspective. The US dollar has officially crossed over into the bear market now. The bear market has reclaimed the price action in the US dollar. All right, that is to be noted. Now we can cross-reference that with the UUP. This is the US dollar index ETF. And as you can see here, it is crossed from green to red as well, from bullish to a bearish perspective. So you have now entered a bear market in UUP. All right. So as you can see, this market is falling. There's nothing anyone can do about that. All right, so here is your chain link, and you have another rally alert for tonight into tomorrow's trading. 7.5 equals the bottom of the Kumo cloud. That's the initial upside target if the market can get there. All right, next up is Litecoin. And you can see here we have a rally alert for tonight into tomorrow's trading as well, with the $60 Kumo cloud acting as support. And as far as upside potential, looks like the market's going to retest the 80 to 85 range in Litecoin. And next up, we got XRP Ripple. XRP Ripple has a rally alert for tonight into tomorrow's trading, trying to get back up to the Kumo Cloud between 40 and 45 cents. Let's see what can happen on the XRP Ripple. Next up is the euro currency. You'll note that the euro currency has a crash alert coming into today. And right now, the market is just consolidating in this narrow range and refusing to go down. But it's official. The market has crossed over to a correction status. So at any moment, we're expecting this thing just to drop. Between 101 and par is the downside initial target, and the market has crossed from bearish to a bullish perspective. So now that you're in a bull market, can it do it? So in other words, the euro currency's bear market rally has rallied so long and strong that it has now changed the landscape of the chart pattern from a bear market to a bull market. Can the baby bull get off the ground? We shall see. Next up is the pound sterling. And you can see here the pound sterling has crossed over from bear market to bull market as well. And prices are sideways to bearish, hitting a new weekly low. 115 equals the top of the Kumo cloud, which is the initial downside target and initial support on the down move. Next up is Bitcoin. All right, so Bitcoin has still consolidated, moving sideways with a bearish bias, but still trading within the consolidation bar on November the 10th. Nothing has changed. We are several weeks in the making. Likewise for your Ethereum. Moving sideways, consolidation bar goes to November the 10th, and we are still moving in that regard too, with a possible rally alert for tonight into tomorrow's trading. The upside target will be between 1,300 and 1,350 if the market can get there. All right, so the question is, any thoughts on what the Bank of Japan did on their yield? I can only tell you that everyone follows suit with the U.S. That's all the other countries are doing. Those central banks are doing what the U.S. did. The U.S. is taking a certain stance. The market was expecting 50 basis points. That's what they did. And so I'm not really surprised that Japan did what they did. Everyone's desperate. Everyone's afraid. I'm going to tell you straight up like this. You know, it's fun to prognosticate from time to time, but I rather follow the system because the system works if you work the system. But let me say this. I feel in my gut that something big and nasty is about to happen. And I believe that direction is going to be to the downside for multiple markets. I don't know the whys or the hows. I can only tell you what I feel in my gut. This happened a few years back where, right, like the first week of January, the markets fell apart. So I don't know. I could be wrong. Anything could happen. But as of right now, the charts are the charts. The algo charts I showed you, that's what the market is. All right. As of this moment, everything that can be known and that is known has already been factored into the price of these markets. And the algos have not picked up any change or shift since the last algo shift that we had. So things are going the way that they should at this point. So I'm not trying to outguess or second guess what I think the market's going to do or whatever. I'm just following the price action and doing exactly what the system tells me to do. The system wants to stay Short, I'm staying short. If the system wants to add the shorts, I'm adding the shorts. If the system wants to reverse and get long, then I'm going to reverse and get long. Whatever the system says, that's what I'm going to do, because that's how you make money in these markets. Sometimes you have to ride a trade out for weeks, sometimes even months, because the trend is so powerful and it's not changing. So you just keep riding it, taking little profits along the way, then getting back into the market short, and you just keep doing it until the market decides it wants to hit a short-term bottom. Then when that happens, you have a choice. You can liquidate your shorts and get long and ride the up wave bear market rally for as long as it's going to move, or wait for the next sell short signal. It's up to you. But that's what the pulse waves are for. The pulse waves give you a heads up in what the market is doing at that moment in time. All right. And if there's any alerts, it'll tell you the market's picking up, the system's picking up some buying or selling, or you got a crash alert, or you got a rally alert, then you roll with it. That's just the basics of the system. We give rally and crash alerts. So you get at least a 24-hour heads up before the market even moves. So you can position yourself. That's why you got to take the trades. You can't afford to miss trading opportunities. It's just how it works, man. It's a long game. It's not a short game. All right, with that being said, remember to smash that like button, and remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.